So practice assessment 2 for the advanced bookkeeping. And there is a little instruction we have. This instruction is same for all the exam, and you're going to see more or less same story in the exam as well. So if you read now, you really don't have to read later on the exam. So it says the exam will be 2 hours. So it will tell you how long is the exam duration. But as soon as you start the exam, we'll be able to see the timing, how long is the time left to be able to see that during the exam time. And then how many questions? You're going to see 5 questions, and all 5 questions are mandatory. So there is no optional. We don't have any choice. We have to answer every single question we have. The VAT rate is 20%. So this is by standard. That means if any question even did not mention, or during the exam, if we see any question did not mention how much is the VAT rate, we understand it's 20%. Then they're saying do not use this sort of thing. So for example, write 100.57, not 100.57. So when you try to show the pens, do not use the comma or do not use the space, because it will not give you any marks. This exam will be marked by the computer. So of course you need to understand, if you write the wrong figure or if you write any format that computer doesn't understand, so you're not going to get any marks from there. So you need to make sure like you write the correct format. And for that reason, when you make something, you have to make sure you can use the full stop. So for example, £100.57, but don't use the comma or don't use the space. For the 1,000, for example, if you like to write 10,000, you can write 10,000, so you can use the comma, or you can just type 10,000. It should be fine. You really don't have to use the comma if you don't want to. So for example, this and that both are acceptable. If you like to insert a comma, or if you like to add a comma after the 1,000, there is no problem for that. But if you don't want, there is nothing to lose. You're going to get the same mark for that. All right, so let's start our assessment. That is practice assessment 2 from the AAT website. And we're going to practice the 5 question, that is 100 marks in the exam we're going to see. And of course, like more or less, like you're going to see the same format in the exam, as I said. So let's have a look. The first thing that we need to know from this question number 1, 2, 3, 4, 5, what is the question we're going to looking for in the exam? The question is a very, very precise. The first question you're going to see from the non-current asset. So this is for sure. So if you make yourself ready for the non-current asset, this question you're going to see in the exam. And question number 2, disposal. Question number 3, accruals and prepayment. Question number 4, adjustment. And question number 5, extended trial balance. So you already know what question you're going to see in the exam, and you can make yourself ready based on that question. And you're going to practice all the question we have in this assessment. And you can see on the left corner, the timing is already started. That is 2 hours. So you're going to see exactly the same format in the exam, the way we're practicing now. And once this timing is finished, even though you cannot submit the exam on time, the exam will be automatically closed and exam will be automatically submitted. Sometimes some students think like, oh, I forget to submit the assessment. The time was running out. So nothing to worry for that. If even the time is running out, your exam will be still submitted. All right, so let's read this question. Question number 1. This task is about non-current asset. You are working on the accounting record of a business known as Amber Trading. Okay. Amber Trading is registered for the VAT. This information is very important. Amber Trading is registered for the VAT. So if the question said the business is registered for the VAT, that means the VAT is not cost for that business. So VAT is not cost for that business. Why? Because we're going to claim back that VAT. So if the VAT is registered for any business, so you're going to ignore the VAT because the VAT is not part of the cost, as the business can claim back all the input VAT. The business has part exchange an item of machinery used in its workshop. The following is the relevant purchase invoice. Okay, so we have a purchase invoice here. And from here, we have to see which one is relevant as a part of the cost. So let's have a look. What did we buy from the supplier? So we have Amber Trading, and this is the supplier, Screen Solution Limited. Okay, so date is 31st of July. That's the invoice number. That's the VAT number from the supplier. Then we have the product. What did we buy? We buy screen printer. This is the main product we have purchased. This is the number of the printer, the serial number, and we have the cost. So this is the cost of the printer. Then compatible floor stand for SP200. So SP200, that means this is for this printer. So of course, if you buy the printer, if anything needed to make the product usable, for example, it is part of that product, you can add this one as a part of the cost. For example, let's say the installation and someone come for making the delivery, someone come for fitting the machine. So any sort of cost that is part of the cost, and without that, the product will not be ready to use. For that sort of expense, we'll be able to add with the cost. So the floor stand is a part of the printer, so we can add this one as well. Screen printer, printing mesh roll. Remember that the printing roll or repair and maintenance, this sort of expense is a revenue expenditure because it is an ongoing expenditure for the business, and we will not be able to add this one as a part of the cost. Very, very careful with that. Any sort of revenue expenditure will not be able to add as a part of the cost, because for the cost, we can only add the capital expenditure. So buying the roll or buying the ink for the printer or buying the printing paper, repair and maintenance, this is not part of the capital expenditure. And for that reason, we'll not be able to add this one as a part of the cost. So we said the printing roll, we're going to ignore that. The next one, we have the net total and the VAT. Remember, VAT is not the cost. We completely ignore the VAT because the VAT will be claimed back by the business. The business is a VAT registered. The question mentioned to us that, so we cannot take the VAT as a part of the cost. So this is the two main costs we have here for this printer. All right, let's read more. So the next information we have here, it says part exchange with printer PM101, balance 5306.40 settled by the hire purchase agreement. So we need to know what was the purchase method. Is it a bank? Is it a cash? Is it a loan purchase or hire purchase? So how we purchase this asset, we have to record that. For this asset, we can see this is a hire purchase agreement. So we'll understand it is a hire purchase. We have to record this one as a hire purchase. Then the next information we have here, the following information relates to the printing machine replaced by the business. Okay, so that is sort of, we are selling something here. This is the part exchange. Part exchange is kind of selling. So for example, you're giving your old machine to get the new one because you need the replacement. And the person who taking the old one, your supplier, he gives some value for that. So let's say he said, you give your old printer to me, and I'll give you the new one, and you have to pay some extra money. For example, you'll give me your old printer and I'll give you the new one, and you have to give £5,000 as well. So old printer plus £5,000, you will get the new printer. So you need to see how much is the new printer value. So if we minus the 5,000, whatever is the difference that he's offering me for the old printer. All right, so item description, printer PM101, date of purchase 1st October 2014, date of sale 31st of July 2016, part exchange value 1750 plus the VAT. Again, if The company is VAT registered. We don't have to worry about the VAT. We have to ignore the VAT. Very careful with that. And then we have some more information. Amber Trading has a policy of capitalizing expenditure over 750. Now this over 750 has to be together. Remember that sometimes what is student think, oh, this is the part of the cost, but it is less than 750. So I'm not going to take it. This is completely wrong. You should take it because these two is together. The cost and the floor stand, these two are together. So together it has to be more than 750. So it's not separate. Don't think it is a 596. So it is less than 750. I will ignore that. Don't do that because it is a part of the cost. All right. The next one we have here. Plant and machinery is depreciated over 8 years on a straight line basis, assuming no residual value. So we just need to divide by 8 with the cost price, and we don't have to do any calculation or any workings because the question says there is no residual value for that. Motor vehicles are depreciated at 25% per year on a diminishing balance basis. So all the motor vehicle we have to depreciate it 25% per year on a diminishing balance. That means the reducing balance. So every year it will be reduced. So we already know what is the diminishing balance, and we have to use the 25% on the balancing amount every year. A full year depreciation is applied in the year of acquisition, none in the year of disposal. Very careful with that. Full year depreciation is applied in the year of acquisition and none in the year of disposal. So regardless which month I buy the asset, for example, my year is ending 31st of March. And if I buy the asset 1st of March, I will charge the full year depreciation. So it's not only for 1 month. I'm not going to only charge for 1 month. I'm going to charge for the whole year because the question said full year depreciation will be charged on the year of acquisition and no depreciation I'm going to charge on the year of disposal. So the year I'm going to sell the asset, for example, I'm selling at the end of the year, just last of the year, but still I'm not going to charge any depreciation because the question said don't do it. All right, so now we have a non-current asset. Now we have to complete this non-current asset from this information. And in the exam, exactly we're going to see the same story. So let's have a look. The first one, plant and machinery. So what is the depreciation? Plant and machinery depreciated over 8 years on a straight line basis. Okay, so 8 years and a straight line. That means we can see here we have a 350, 350. And this is the plant and machinery that is printer PM101. So that means this is the printer PM101, the one we are selling. When did we sell it? Date of sale 31st of July 2016. Remember, in this year 2016, we are not going to charge any depreciation because the question said on the year of disposal, don't charge any depreciation. So let's have a look. So for this year, so we sold it 31st of March, we already use it. Then we sold it 31st of July. So that is year ending 31st of March 2017. So for that year, I'm not going to charge any depreciation. So this year I'm going to say no depreciation. I'll say 0. And the carrying amount I'll say 0. Why? Because the asset has been sold during this year. And this year I'm not going to charge any depreciation. But I'm going to say how much we sell it for. So let's have a look how much we sell it for. We sell it for £1,750. Remember that, ignore the VAT. Business is registered with the VAT, so they will claim back the VAT anyway. So I'm going to say the proceed amount, disposal proceed is £1,750. And the disposal date is 31st of July 2016. So we say X6. So this is the story of this plant PM101. The next one we can see here, one drop down here. That means we buy something, we have to record that. So buy a printer. So if you remember the serial number, if you want to go back, you can always check which printer we have buy. So printer SP4200. So you have to choose this one from there. So SP4200 printer and the stamp. I have to write the acquisition date. When did you buy it? 31st of July 2016. And after that, the cost, how much we buy it for. So we need to add this to cost. So let's add this to, we have 4950 plus 596. So 4950 plus 596 is gives you 5546. So let's record this one. 5546, the purchase cost. 5546. All right. Then how did you buy this one? Hire purchase. The question clearly tells us it's a hire purchase. Then you have to calculate the depreciation for the next year. So let's have a look. How do you do that? It's the plant and machinery. And they said we have to get the depreciation over 8 years with no residual value. So no residual value over 8 years. So let's do that. So we have 5546 divide 8. And that gives me 693.25. So 693.25. Remember, if you see the decimal, don't worry like your answer is not correct. It is just like the way the question it is. Don't think like if it is a decimal, the answer is not correct. And how much will be the carrying value? So 5546 minus the depreciation. So 5546 minus the depreciation, it is 4852. 4852.75. So this is your carrying value after 1 year. Okay, so this is the story of our printer, the new one. Now we move to the motor vehicle. Motor vehicle, they said the depreciation is 25% on diminishing value. So let's do the first one. So we do, this is our 5310.36. This is our carrying value for this year, 31st of March 2016. For this year, 5310.36. That's our carrying value. So you have to calculate 25% on diminishing balance. That's why taking the balance 5310.36 times 25%. And that will give us 1327.59. 1327.59. And how much will be the carrying value? So 5310.36 minus the depreciation, 1327.59. That will give you 3982.77. So this is your carrying value. All right, then we have a van. This is the hire purchase. The question already gave it to us. Then we have another motor vehicle. So this is 6540. So this is the carrying value for that. 6540 times 25%, and that will give you 1635. 1635 is the depreciation. If you minus with 6540, that will give you 4905. That is our carrying value. And I think that's it. So that's how we can complete our non-current asset register. And this question will give you 18 marks. Can you imagine? It's 18 marks question just to complete this non-current asset register. And you're going to get this one in the exam, 100% sure. This will be your first exam. So you need to make sure like you are very much ready for that. All right, so let's move on to the next one, the second part. The second part we have here, it says, which one of the following best describes the residual value of a non-current asset? Residual value is when we have an asset and after the useful life, how much you can sell it for. For example, let's say I have this phone and let's say I use it for 10 years, and after 10 years, if I can sell it for £50, So residual value is 50 pounds. So at the end of the useful life, how much is the market value for that? And this is called residual value. So which one of the following? So let's have a look. So we have expected market value at the estimated date of disposal. So this is the one. So estimated market value at the estimated date of disposal. So expected market value, how much you can sell it after the useful life. So what will be the disposal date, how much you can sell it. So this is the residual value normally we say. All right, so let's move to the next one. The question number 2 that we're going to see now, that will be from your disposal. And this question will be definitely in the exam. Make sure you have to calculate the depreciation and you have to do some journals. So disposal journal is a very common in the exam. You need to make sure you write it down, the note for the disposal. For example, when you remove the non-current asset, what is the journal for that? When you remove the accumulated depreciation, what is the journal for that? When you remove the, when you sold the asset and get some money on the bank, what is the journal for that? When you do the part exchange, what is the journal for that? There's 5 journal that you have to understand and you have to memorize because you're going to see this one in the exam for sure. All right, let's read this question. This task is about ledger accounting for non-current asset. You are working on the accounting record of a business for the year ended 31st of March 2017. VAT can be ignored, so you don't have to worry about the VAT. An item of equipment was part exchange for a newer model on 31st of July. So we purchased, we have item, an item of the equipment was part exchanged for a newer model 31st of July. So that day, 31st of July 2016, we gave the old asset to get the new one. The original equipment was brought 4,500 on 11 June 2014. So we buy this asset for 4,500 on 11 June 2014. Depreciation is provided over 3 years on a straight line basis, assuming no residual value. If there is a residual value, we minus it from the cost and divide by the number of years. But if the question said there is no residual value, we don't have to worry about that. So 3 years. So 4,500 is the cost, divided by 3. It will give me the depreciation per year. For all classes of non-current asset, a full year depreciation is applied in the year of acquisition, none in the year of disposal. So a full year depreciation will be charged in the year of acquisition. So the year we buy the asset, we're going to charge the full year depreciation. But when you're going to sell the asset, the year we dispose it, we don't have to charge any depreciation. Same way we just done the last one. So even though we buy the asset at the end of the year, we have to charge the full year depreciation, but the year we're going to sell the asset, we're not going to charge any depreciation. A part exchange allowance 850 was given. So this is the value they consider. When we give my old asset, they consider 850 for my old asset as a part exchange value. 5180 was paid from bank to complete the purchase. That means I give my old asset, and top of that, I give another 5180 to get the new one. So the part exchange value was 850. Also, I gave 5180 from the bank to get the new asset. Okay. Now the first one they're asking, calculate the accumulated depreciation. Accumulated depreciation means total depreciation up to now, up to the selling, up to the disposal date of this asset. So let's try to understand, when did we buy the asset? We buy June 2014 and we sold it July 16. So we're going to charge the full year depreciation for July. So 2014 year 1 and year 2015 year number 2. But 16 we're not going to consider. Why? Because the question said none in the year of disposal. So the year we sold the asset, we are not going to consider the depreciation for that year. So for that reason, we will ignore that. So we have a cost 4,500. So 4,500 is the cost. And we have to divide by 3. Because the question said the depreciation is a straight line for 3 years. So divide by 3, that will give us 1,500 per year, per annum or per year. And for the 2 year, here 2014 and 15, for the 2 year times by 2, it will give us 3,000. So my accumulated depreciation is 3,000 for 2 years. So I said accumulated depreciation 3,000. It's not the difficult one. All right, let's move to the next one. The next one, they are saying, complete the disposal account. Show clearly the balance to be carried down or transferred to the statement of profit or loss as appropriate. Now we have to do the disposal account. Make sure you are very much okay with the disposal journal. So otherwise it will be difficult for you. The first one, we have to remove the non-current asset. The first one, remove the non-current asset. So normally non-current asset is a debit. If I like to remove it, I make it credit. So I said disposal debit 4,500, and non-current asset, that is equipment here. It could be machine, could be anything, equipment cost credit 4,500. So disposal debit, equipment credit. Now it is a disposal account. So on the debit side, I'm going to write equipment. We really don't have to write, we can pick it from there. So we can choose from here. Only have to choose the right one from the drop down list. Equipment 1,500. All right, the next one we have the accumulated depreciation that you have calculated 3,000. Number 2. So we have accumulated depreciation debit 3,000, and the disposal credit. Normally accumulated depreciation is always credit, but the reason here it is debit because we are removing this asset, so all the depreciation also has to go. So debit and credit like a plus and minus, so it has to go from here. So now record this one here. So we said accumulated depreciation, that is 3,000. The exam, all you have to do, you have to pick the right one. And after that, we have some part exchange. You see that? So the money is coming for the new, but the money is not receiving in the bank. If the money come to the bank will be debit. But here I'm not receiving any money because I'm receiving the new machine by giving the old one. So for that reason, my equipment at cost, the new equipment, you can say new equipment cost debit, but in the drop down, if you don't see the new equipment, you can choose the equipment debit, that is 850, and disposal credit 850. So on the credit side, we're going to write equipment at cost 850. That's it. Now look for which side looks higher. So we can say 4,500 looks higher. We write the same 4,500 here and find the difference. The difference will charge to the profit and loss account. So you're going to say profit and loss account. That is 650. Now you can see it very clearly. 5,000 was the cost, and if the depreciation is 3,000, so the carrying value is 1,500, and we sold and we got it 850 for that. So we are clearly showing it's a loss, isn't it? Because if we sell the asset less than the carrying value, it is a loss. If we sell the asset more than the carrying value, it is a profit. So here it looks like we sell it less than the carrying value, and that's the reason we have the loss. All right, so the question didn't ask for loss or anything, but we just discussed to understand that. So let's move to the next one. The next one we have here, they said calculate the purchase cost of the new equipment from the information above. How much is the cost of the new asset? This is very simple, I think. 5180 you give from the bank, and they give us 850 for the part exchange. So for the part exchange, they consider 850, and also we have to give 5180 from the bank. So 5180 plus 850. Let's have a look how much it is. 5180 plus 850, that is 6030. So this is our cost for the new machine. So we said the cost for the new machine, 6030. All right, then the next one is says, complete the sentence. The equipment at cost account will have a final balance carried down when the ledger account are closed. So how much will have the equipment balance? So let's have a look. Let's make a T account. So it said equipment. Okay, they said the opening balance. So we have 19,380. So opening balance, we have 19,380. And we sold the asset that was cost 4,500. We buy the new asset that is 6030. That's it. So we added this one, 19,380 plus 6030. That gives me 25,410. 25,410. We minus this one that we sold is gone. So the difference of the balance CD, we have 20,910. So it said 20,910 will be the closing balance for the equipment. All right, let's move on to the next one. The next one we have here, on 31st of March 2017, new fixture and fitting were purchased. Okay, these are funded by the loan from a family member. You are given the following information. Purchase cost 3248, a depreciation charge for the year ended 31st of March 17406. Complete the below. So we need to look at the narrative here because we don't know the journal they're asking for the recording the purchase cost or the depreciation. So if we read the narrative, we'll understand more. So the narrative is saying depreciation charge. So they're asking how to record the depreciation charge for the year ended 31st of March 2017. So all the depreciation, we have a simple journal for all the depreciation. Depreciation charge is the expense on the profit and loss account. And for that reason, it is a debit. So depreciation charge will be debit on the profit and loss account as an expense. On the other hand, the accumulated depreciation for that asset will be credit on the statement of financial position. So let's have a look. Depreciation charge will be debit, that is 406 on the profit and loss account. Fixture and fittings, by the fixture and fittings. So let's have a look. Where is the fixture and fittings? Credit, same amount, 406. Remember, depreciation is always expense on the profit and loss account, and the accumulated depreciation is always credit on the statement of financial position. Because of the accumulated depreciation, the carrying value of the asset goes down on the balance sheet. So when we have a cost, we minus the accumulated depreciation to find the carrying value or net book value. All right, so I think this is the one for question number 2. Let's move to question number 3. Question number 3, we're going to see the question from accruals and prepayment. This will be definitely in the exam. So make sure you practice the accruals and prepayment. All right, let's take this one. This task is about ledger accounting, including the accruals and the prepayment. You are working on the accounting record of your businesses for the year ended 31st of March 2017. In this task, you can ignore the VAT, okay? Business policy. accounting for the accruals and prepayment. An entry is made into the income expense account opposite to entry relevant asset liability the following period. Okay. This entry is a reverse. Remember that any sort of reversal is the first day or the beginning of the day of the next year. For example, if something is accruals for this year, for example, let's say the accrual expense for year ending 31st of March 2017, for example, then 1st of April 2017, it will be the reversal date. So it is a liability for this year, but at the beginning of the next year, it will be reversal. Very, very careful with that. So reversal date is not the end of the next year. Reversal date is the beginning of the next year. So when the current year will be end, the reversal date will be the first day of the next year. So beginning of the next year, not end. All right, so let's have a look. What information we have is that you are looking at the rental income. Okay, rental income is a credit, is income for the year. The cash book for the year show receipt for the rental income 25,500. So the bank is saying we have received on the bank 25,550. This include 2720 for the period 1st April 17 to 30 of April. So you can see clearly our year is ended. Our year is ended 31st of March 17. So inside of this figure, 25,550, one amount that is 2720 is the prepayment income. So we received for the prepayment. Normally what happened, the rent we receive in advance. We receive the rent in advance. For example, for the month of December, you pay the rent at the beginning of the December. So that's why the landlord, he received the rent at the beginning of the month. So this has happened here as well. So they receive in advance. So 1 month he received in advance. So this income not belongs to 31st of March 2017. It belongs to the next year, because this is for the 1st April 17 to 30 April. That is the starting of the next year. So it is a prepaid income for this year. So prepaid income is a liability. The journal for the prepaid income is income account debit. If you remember the prepaid income journal. So income account is a debit because it will reduce your income. Normal income is a credit, but as it is a prepaid income, I have to reduce my income because this income not belongs to this year, it belongs to next year. So I have to reduce the income for this year. So that's the reason I make the income account debit. And the prepaid income, we make it credit. Why? Because it is increasing my liability. If I take the money in advance for any reason, I have to provide the services. So if I take the money in advance, I have to provide the service, or I'm liable to do something because I already take the money. So it's create a liability on the balance sheet, and it will reduce the income on the profit and loss account because this income does not belong to this period. Okay, so now I have to make the ledger account, T account. They're saying we already have one prepaid income reversal from the last year, 2430. So that's coming from the last year. It was prepaid for the last year, and this year it become reversal. So that's fine. Now we need to record this one for 2720. So we said prepaid income, obviously rental income is a debit. We have to reduce the income. So the rental income, we're going to write prepaid income. And that is 2720. Because the rental income normally is a credit, I will make it debit now because I want to reduce it. How much? By 2720. And we receive on the bank how much? 25,550. So bank is a debit. Bank is a debit, 25,550. And for what? Rental income is a credit. Any sort of income is always credit. So we need to write rental income is a credit. So on the credit side, you have to write the bank. That is 25,550. And any difference will go to the profit and loss account. So you need to add it the higher side. This look like higher. So 2430 plus 25, it will give you 27,980. Same thing, 27,980. When you type the information, you will see it will be automatically added together. And the difference, you minus this one, find the balance CD, that is profit and loss account. So the profit and loss account, we're going to show the income 25,260. So that is the income we're going to show for this year, because 2720 is not relevant to this year, even though you're receiving 25, but it's not for all for this year. It's 2720 for the next year. You have to make a reversal. All right, let's move to the next one. The next one we have here, they are saying, answer the following regarding the prepaid income reversal 2430 in the rental income account above. So we have 2430, that is reversal from the last year. So last year it was our liability, but not this year, remember that. So it was a liability for the last year. This year it is not liability. As soon as I make the reversal, that means the liability is gone. So it was liability for the last year. For this year, it is not liability because I make the reversal already. Reversal means is everything now sorted. So let's have a look. What is the question? How were the element of account equation affected by this transaction for 2430? Okay, so let's have a look. The asset have no connection with the prepaid income anyway. Remember that. If it is a prepaid expense, then it creates asset. But prepaid income is a liability, it's not asset. So asset have no change. The liability will be decreased because last year it was my liability. So for the last year, it was my prepaid income. So it was creating the liability. But this year, when I make the reversal, then it will reduce my liability. So increase the liability and decrease the liability, it will be equal and it will be no impact, 0. So the liability will be decreased this year because last year I increased the liability because it was a prepaid income. On the other hand, any sort of income, because it is income for this year, it wasn't income for last year, but this is the income for this year. So for this year, my capital will go up. So capital always increase because of the profit or income, or capital always go down because of the drawings or loss. Remember that. If you remember your template, opening capital plus profit, less losses and less drawings. So this will give you the closing capital. So any sort of income or any sort of profit will increase your capital. So the capital will be also increased. Remember that if it is a reversal of the prepaid income, so this income belongs for this period. So your liability will be decreased and income will be increased. And if the income is increased, that means capital is also increasing. There's no link with the asset for that. Let's read the next one. The next one is saying, which one of the following dates should be entered for the transaction in the ledger account? As I said, reversal date will be the first day of the next year. So this comes from the last year. So that means last year was 31st of March 2016. So the reversal date will be first day of the next year. So my new year will be started 1st of April 2016. So this will be my reversal date. So when my year is ended, the next day is my reversal date. So that will be 1st of April 2016, because this reversal for the last year, not for this year. Remember that. All right, so let's move to the next one. The next one we have here, it says, you are now looking at the admin expense for the year. There was an accrual for 620 on 31st of March 2016. This has been correctly reversed. So there is an accrual. Accrual is, they said, is correctly reversed. Accruals means we have used the services, but didn't make the payment yet. Accrual expenses. For example, for the month of March, we have used the electricity, but we didn't make the payment yet because the bills we're going to receive maybe first week of April or the next month. So we have used the services, but didn't make the payment yet. And for that reason, this expense is accrued. So if my financial year for the business is ending 31st of March, that means this will be my accrued expense for this financial year, and it will create a liability in the financial statement. Is accrued because I need to pay this money as I use the services. So it will increase my expense. That's why expense will be debit, and also it will create the liability, and the liability will be credit. Okay, let's have a look at the cash book for the year. Show payment for the admin expense is 14,215. So 14,215 is the money we paid from our bank. You have a bill for the admin expense showing a total 1995 for the quarter ended 31st of March 2017. This was received and paid after the year end. It's very common because if I receive the bill at the end of the month, for the month of March, I'm going to receive in April, so I have to pay in April. So for the quarter ended 31st of May, so quarter means 3 months, quarter means 3 months. So that means this 1995 is the bill for 3 months. Which 3 months? March, April, May. They said ending on May. So if I go back 3 months, March, April, May. So March belongs to the last financial year, and April and May belongs to the next financial year. So accruals is only for 1 month, March. I couldn't pay the bill for March because the bill come after the quarter. So we have to do 1995 divided by 3, and that will give us how much? 665. And this is my accruals, isn't it? And this one will pay later on. And this expense we have to add on 31st of March 17. Even though I did not make the payment for that, but I still need to increase the expense by 665 because of the accrual concept or the matching concept that we follow to prepare the accounts. According to the accrual concept, all the income and expense need to be matched against the income or expense that is relevant for that financial year. Regardless, we paid for that or regardless we received the money, but we have to still record it. So 665, even though we didn't make the payment until May, but still it belongs to 31st of March 17, we have to include on that financial year. So we said, okay, we understand that. So this is our accrued expense. That is 665 and dated 31st of March 17, because that financial year, it will be still accurate. All right, very good. Now we have to do how much is the admin expense for the year ended 31st of March 2017. This one is a very common in the exam. Remember that accruals and prepayment will be in the exam for sure. So make sure you revise this area very well. And this exam could be very tricky. This exam could be very easy because you know which question will be for which number. So if you can make yourself ready for that question, for that specific number, you can get the full marks. But if you are not practiced enough, you can end up with very poor marks in the exam. All right, so cash book figure. So from the cash book, we paid 14,215, we can see. Then you have an opening adjustment. Opening adjustment, the question said we have a reversal 620. So this one you have to minus it's a reversal of that good expense that's come from the last year. So obviously we have to minus it. And the closing that we calculated, we have to add it 665, even though it did not pay, but it still have to add. And that will give us the closing figure. So opening, the cash book figure minus the opening and the plus the closing. That will give us how much? 14,260. Thank you. Very well done. All right. So this is our story for this accruals and prepayment. Let's move to the next one. Let's try this one just to say what is debit and what is credit. Accrued expense. Remember that accrued expense is a liability. I have used the services and I have to pay for that. So for example, the electricity expense, we said, I used the electricity for the month of March, but I still need to pay for that. And for that reason, it is my liability. I use the services, I have to pay for that. And it is my liability for that reason, it is a credit. Admin expense is an expense. Remember that any sort of expense is a debit for us. So expense is a debit. Then we have interest received. Interest received is income. If we receive any income, income is always credit. So interest income is a credit. And payroll liabilities, any sort of liabilities, it could be payroll, VAT liabilities, any sort of liabilities is always our credit. That's it. So this question will not be difficult if this question comes to just identify is it debit or credit. Let's move to the next one. Question number 4. Now, question number 4 will ask you some question from the suspense account. So for that reason, you have to have a very good understanding of the suspense account, and you need to know what type of error it is and how to correct the error. Let's try to do it. I try to explain as detailed as possible, but if you have a still question, you can always ask. Let's read that. This task is about accounting adjustment. You are working as an accounting technician for a sole trader business with a year ended 31st of March. A trial balance has been drawn up and suspense account opened. Suspense account is created when the debit side of the trial balance does not match with the credit side of the trial balance. You now need to make some correction and adjustment for the year ended 31st of March 2017. So now you need to make some adjustment. Let's have a look. You may ignore the VAT, so we have to ignore the VAT for that. Let's look at the first one. The first one we have here, it says a refund of 398 for electricity cost was incorrectly entered into the bank account. So the bank account is absolutely fine. We received the money, so we make the bank debit. So there is no problem for that. No other entry were made. So remember that if the question give a clue like no other entry make another side, that means the another side was empty. And if the another side is empty, then suspense account is created. Very simple. If you find this clue on the question, no other entry have been made other side, that means the suspense account is created, because I cannot keep one side empty. Debit and credit always has to be equal. So if the debit and credit is not equal, that means suspense account is created. So let's have a look what is my mistake here. So what I did, I said bank is a debit because I received the money. How much? 398. Bank is debit. And I didn't write anything for the credit side. And if I didn't write anything for the credit side, so suspense is created. Suspense 398 is created. Credit. Now I want to make correction of this mistake. So I know if I refund the electricity, then electricity need to be go down. Normal electricity is a debit. If I receive the refund, then electricity will be credit because the expense need to go down. So what I'll do now, I'll make the electricity expense. So credit, so electricity expense, I'll make credit, that is 398. And what will be debit? The suspense. Suspense will be debit, 398. Now this debit and this credit will be cross each other. So debit and credit will be crossing each other. So suspense will be gone, suspense will be gone. On the system, it will be bank debit and electricity expense credit. That's how we have to make the correction. First, we have to identify the mistake. And once we identify the mistake, we have to remove the suspense and record the correct one. Very, very careful with this question. So we need to say suspense is a debit. Suspense is a debit. That is 398. And we have electricity cost is a credit, 398. So this is sorted. Let's read the next one. The next one we have here, machine repair costing 480 were paid for using the business bank debit card. Okay, the correct amount was credited to the bank account, so we make the bank credit and debited to the machinery at cost. We made a mistake, so let's find it out. What was the mistake? So I said machinery at cost debit 470 and paid from the bank, so bank is credit 470, but the question is it was for the repair. It is error of principle, isn't it? So we paid for the repair, but by mistake we said we buy the asset, we buy the motor car, we buy the machinery. It's not true. I just paid for the repair and maintenance, but I didn't buy that machine. So that's my mistake. Bank is okay. This is my mistake. What I need to do, I need to make the correction now. I have to remove this one, machine at cost. So I make it before debit. Now I'll make it credit. Machine at cost, I'll make it credit 470. So it will be gone now. This and this, debit and credit will be gone, cross each other, debit and credit. And the new debit will be repair. So repair and maintenance will be debit 470. So this will be gone, and repair and maintenance will be system, and the bank will be the system. So very carefully have to identify our mistake first, then have to correct the mistake. So you have to say here our repair and maintenance, it will be debit 470, and the machine at cost need to go. So this will be credit 470. All right, very good. Let's move to the next one. Next one, number C, is asking entries for prepaid equipment hire cost 460 were made. These were on the correct side of the both relevant ledger account, but a figure 640 was used. Oh, this is a mistake. We done the right journal, but we use the amount 640 instead of 460. 460 is the right one. But sometimes when you try to use the computer or calculator on the keyboard, if you do it really fast, sometimes you can make a mistake. So now we found the mistake and we have to remove it. So first we need to know what was the journal. So the prepaid expense, remember that prepaid expense is always asset. So prepaid expense is asset, and for that reason it is a debit. So we make 640. It's supposed to be 460, but we make 640. So we are looking at what mistake we have done. And we have equipment hire cost. Equipment hire cost. This is expense need to be reduced. That's why it's a credit, because it belongs to the next period. Prepaid expense always reduce the expense. That's my mistake. It's supposed to be 460, not 640. Now I want to remove it. So that's my mistake. I want to remove it. If I like to remove it, I make the opposite journal. So first I remove this one, prepaid expense debit. So I make prepaid expense credit 640. So this will be gone from this one. And I make expense hire debit. So expense hire debit. This will be gone as well, 640. So my first journal will remove the old mistake. Journal number one, first journal will remove the old mistake. Now we'll do the second journal for the correct one. So the correct one will be prepaid expense debit. This time I'm going to write 460, and equipment hire expense, that is credit, 460. So there we need two journals for that. One to remove the old mistake, another one to record the correct one. So let's do that. You will say here So the first one we said equipment hire at cost, and then we have prepaid expense. Prepaid expense. So we need to remove that. So the mistake was 640. It has to be removed. 640. We done opposite. It will be gone. Now we record the correct one. That is prepaid expense debit, because it's an asset. But this time the correct one 460, and the equipment hire cost, it will be credit. It will reduce my expense. 460 to journal. The first one to remove the previous mistake. The next one is the correct one. All right, let's move to the next one. The next one we have here, it says no entry have been made for interest due to be paid on a loan 5,000. Annual rate of interest 2.8% need to be accounted for. Okay, so it's a very easy. So we have loan interest. Remember that loan interest is always expense on the profit and loss account. So on the P&L account is expense, and it will create a liability. So low interest payable, that is a liability on the SOFP. So on the profit and loss account, we claim the expense, and on the financial statement, we create the liability. So let's see how much it is. 5% is the capital amount, and 2.8% is the interest. So let's do that. 5,000 times 2.8%, and it will give you 140. Very well done. And you have to now record the journal. So it's the loan interest. Statement of profit and loss account, 140 is a debit. And the loan interest is statement of financial position, that is payable, is a liability. That's why it will be your credit. That's it. All right, let's move to the next one. The next one is look like a ethical question. So it says, now that you have posted the journals, you are pleased to see that suspense account is clear and the trial balance totals agree. Remember that even though the trial balance agree doesn't mean the financial statement are free from any error, because we know we have two types of error. One, because of this error, financial statement or the trial balance will be still balanced. And there are few errors because of that, the trial balance will not be balanced. So you have two types of error. One will create the suspense account because the trial balance will not be balanced, it will be imbalanced. Another one, even there is an error, but trial balance will be still matched. For example, error of original entry, for example, error of commission, error of omission, error of reversal, compensating error, this sort of error, even though there is an error, the trial balance will be still match. So this says, I can or I cannot conclude that business include are now free from all error. Remember that I cannot. Even though the trial balance is matched, I cannot guarantee you there is no mistake. There is a possibility there is a mistake there. Then I can or I cannot conclude that an inventory valuation as a 31st of March 17 is included in the trial balance. I cannot, because I didn't see any closing inventory in this question. So I cannot confirm the closing inventory on the trial balance. So I have no idea. I cannot. Okay, let's read the next one. You are working as an accounting technician on year-end accounts. Okay. The following are the situation where you may have to record the adjustment. Okay, so when you need to make the adjustment, year-end adjustment. A client want to improve the profit figure. No, if the client said, I need to show some more profit because I like to get some loan, we cannot do it. It will be like unethical. Your firm need to meet the deadline for preparing the final accounts. Your supervisor tells you to save some time by using the net realizable value for all the inventory. No, I cannot do it. Because of my supervisor state, use the NRV, I cannot do it because inventory should be valued at a lower of cost and the net realizable value. Between these two, I have to find the lower one. Because of my supervisor state, or I'm close to the deadline, I cannot follow that. A client sales manager wants you to accrue for a bonus based on the current year sales. The bank statement shows that the bonus was paid in the next financial year. Yes, we can take that one, because if the bonus is already entitled, if the bonus is already accrued, then obviously I can use this one as income even though I did not receive it, because it's accrual concept. So if I'm sure I'm going to get the bonus for this year, I have to account it for this year even though I receive the money next year, because this is accrual concept. That's how we prepare the accounts. All right, so we found the right one. Let's move to the next one. The next question we have here, this question is from the adjustment question. And remember, this question could become adjustment to the cash book, could be adjustment to the bank statement, reconciliation. So the question need to be understood very carefully, very carefully, this question. Or this question can come from two sides, either from the bank reconciliation or either from the sales ledger or purchase ledger control reconciliation. Because we have two types of reconciliation. One is control account reconciliation, that is sales ledger or purchase ledger, or we have a bank reconciliation. This is this one. In the bank reconciliation, we have a two. One, update your cash book. One, do the reconciliation. We already know that if something is on the bank statement but not on the cash book, we have to make the adjustment on the cash book. If something already in the cash book but not on the bank statement, we have to do the reconciliation, because we cannot change the bank statement. So when we have something on the cash book but not on the bank statement, and we cannot change the bank statement because bank statement is sent by the third party, by the bank. So for that reason, we have to reconcile it manually. So you need to read the question very carefully. Let's read the requirement first. This question, first you read the requirement. Use the following table to show three items. So look for three items that should be appear on the cash book side of the reconciliation. Cash book side of the reconciliation. Enter only one figure for each line. Do not enter zero on unused cell. So something we done in the cash book and we have to now reconcile it. So the mistake is on the cash book and we have to now reconcile it. Let's have a look, the first one. So the first one we have here, number one, a check 63 received from a customer was dishonored by the bank on the last day of the accounting period. No adjustment has been made in the accounting records. So our cash book need to be updated, isn't it? A check has been dishonored. Try to understand. On the cash book, we have a two side. On the cash book, we have a two side, debit side and the credit side. If money in, we record on the debit side. So money in. For any reason, if we receive the money, we record on the cash book debit side. Money out. For any reason, if the money is going out from the bank, we record on the cash book credit side. Now, if I receive a check from a customer 63, that I already recorded here on the debit side because I received the check and I already updated my account. I said my cash balance will go up by 63. But when I give it to the bank said there is no money of that person account. So the bank dishonored it. The check is bounced. Now I have to reduce my balance from the cash book, isn't it? So what I do on the cash book, I have to make it less because I already recorded 63 as soon as I received this check from the customer. But the bank said, sorry, you cannot clear this check because this check, the person gave you the check, you don't have any money. So what I have to do now is I have to reduce it. So I have to record 63 on the credit side so that the debit and credit will be cross each other. So I said item number one, we make 63 credit because this check is not clear. Then number two, it says a customer has overpaid. The remittance advice 670 each have been received and processed in March. 2 banks credit are on the bank statement. So there is nothing with the cash book. I really don't have to do it my record. So a customer has been overpaid. 2 remittance advice for 670 each have been received, okay, and processed in March. 2 bags credit are on the bank statement. So it's something I cannot basically change the bank statement. Something is on the bank statement, I cannot change it because it's a mistake on the bank statement. It will go to the reconciliation. I didn't make a mistake on the cash book, so I have to ignore that. It will go to the reconciliation. Number 3, I have an advice has been received from the bank showing bank charges 92. This has been entered in the cash book, but not yet on the bank statement. Okay, so my job is done. This has been entered in the cash book. So I already done my job. So I really cannot change the bank statement. So I cannot do anything. So I have to ignore it because I have done my job. Number 4, a direct debit payment to 128 has been recorded in the cash book as a receipt. A direct debit payment to 128 has been recorded in the cash book as a receipt. So when you make a payment, it's supposed to come to the credit side, but by mistake, I make it debit. So 128 should be on the credit side, but by mistake, I say it's a debit. So now I have to remove it, isn't it? So what we have to do now, we have to do the correction. How we do that? So first I need to write 128. Again, I have to write 128. Why? Because the first 128 will remove my old mistake and the new one will be in the system because I already recorded 128. For example, let's say if I supposed to give you £5 and rather than give you £5, if I take £5 from you, so I have to now give you 10 because I supposed to give you 5, not take from you. So now I need to give you double because 5 will remove my old mistake, another 5 will be the correct one. So that's why I have to write double. So 128 times by 2, that will give you 256. You have to record 256. So number 4, 256 is a credit. Why double? Because I already made a mistake. To make the correction of the old mistake, I have to record double. Then we have number 5, a bank's receipt 1590 from a customer appear on the bank statement, but is not recorded in the cash book. Oh, that's my job. So the bank statement showing this amount, but I didn't update my cash book. So now it's time to do it. So money received, that means on the cash book debit side. So 1590, cash book debit side. So you're going to write number 5, 1590, cash book debit side. That's it. It could be very simple. It can give you very easy, quick marks in the exam, 6 marks question for this one, if you understand it. All right, let's move to the next one. The next one we have here that says, an accounting technician, why it is important to follow the organization policy and procedure? Remember, it's a very simple answer: to understand the individual and the team responsibility. So every organization have a different policy. For example, some organizations say you have to wear the white shirt and the blue pant and the red tie. Some organization can say you have to be at work 10 minutes before they start. So every organization have a different sort of policy and procedure. So to understand my responsibility as a individual person and as a team member is very important. I have to follow the organization policy and procedure. So go for the C. So to understand the organization policy, to understand the individual and the responsibility to be understood. Okay, let's do the last question. Last question you're going to see in the exam, that is extended trial balance. Definitely you have to practice this question because this question give you like easy 11 marks in the exam. It's a very easy question. If you practice few times, you'll be absolutely fine. Only be careful with the doubtful debt allowance. This question, if you have the practice assessment 1, if you look at that video, I have a video for the practice assessment 1 as well. In that question, you will see the allowance for the doubtful debt, and that is like how to increase or decrease it. Only this could be the trick for your this exam, for your extended trial balance. Other than this question is very easy. It will give you very good marks. All you have to do, you have to identify is it a debit or is it credit? Is it going to the profit and loss account or is it going to the financial statement? Very simple. Okay, let's start with the first one. You can try with me together if you want, so we can see we're doing right or wrong. So start with the first one, allowance for the doubtful debt. Allowance for the doubtful debt is the item for the SOFP credit. So you need to say SOFP credit. So SOFP credit, that is 1,500. As soon as you do that, you can do one thing, you can make it like color. So if you just click on this arrow, it will make it like a color so that you understand you've done this one. If you like to do it, you can always do that. Bank, we have some adjustment. So bank, we have a debit 5726. So you have to find the difference. 5726 is the debit, and on the adjustment, you have a 2416 is the credit. So let's find the difference. 5726 minus 2416, it will give you 3310, and the debit balance is still higher, so it will be debit on the financial statement. 3310 on the financial statement. Very well done. Capital, we have a credit on the ledger balance, and also we have a credit on the adjustment. So we need to add this one, 19,070 plus 9430. We have to add this to, and remember the capital is the item for financial statement on the credit side. So let's add this to find how much it is. So we have 19,190. Yeah, we have 28,500. Okay, so let's take that 28,500. 28,500. Very well done. It's a credit. Closing inventory will go to both places. Remember that. Closing inventory going to profit and loss account as a credit because you minus it from the cost of sales. If you remember, opening inventory plus purchase less closing inventory. For that reason, we minus it from the cost of sales. For that reason, it is credit on the profit and loss account, and also it is your current asset. And for that reason, it will go to the financial statement as a current asset. So it will go to the both place. So on the profit and loss account, it will be credit. That is 17,510. And on the statement of financial position, it will be debit as a current asset, 17,510. The next one is the depreciation. Remember, depreciation is the expense on the profit and loss account. 5946. Then have irrecoverable debt. Irrecoverable debt is the expense as well on the profit and loss account. The money, it is not possible to recover from your customer. It is called irrecoverable debt. Office expense is also your expense. We have a debit 33,222, and we have an adjustment 1320. This is also debit. One debit, another debit will be added. So 33,222 plus 1320. This will give us the total expense for the office expense for the profit and loss account. And that is how much? 34,542. Thank you. Then we have an opening inventory. Remember, opening inventory is always a debit on the profit and loss account. That is 16,760. All right. Then not 19 is 16. Okay. Then we have a other payable. Payable is a liability, remember that. So we have a credit and credit, 1460 plus 1320. 1460 is the credit and 1320 also credit. It will go to the financial statement on the credit side. 2780 is a liability, is a payable. It could be trade payable, it could be unpayable. Payable is always liability, belongs to SOFP as a credit. Then payroll cost, remember that payroll cost is our expense. That is 28,381. 28,381. This is our payroll cost. Purchase is also expense. 1777 177 363. Then we have a purchase ledger control. This is a liability. So you have a credit and credit both. 19,402 plus 495, and that will be the credit, is our liability, and that will give us 19,897. Then the sales is income. Sales is always credit on the profit and loss account. So 268,077. Then you have a sales ledger control. This is our asset. That is 38,934. Suspense account has to go. Remember that don't do anything with the suspense account. This has to go. It has to be removed. Don't do anything. VAT, we have a credit and we have a debit. So we have to find the balance. 5225 minus 2416. And VAT is a liability. Now, if the debit side is higher, it could be asset as well. It depends which side is higher. So for this question, we can see the credit side is higher than the debit. So it is a liability. So it will be credit 2809. Very well done. Then you have a vehicle cost. This is our asset. So we can see debit and debit both 22280 plus 9430. So you have to add these two because both are debit. And this is our asset, belongs to SOFP, statement of financial position. 31,710. And we have it, the last one, vehicle accumulated depreciation. This is a credit on the SOFP. All right, that is 13,873. That's it. This question could be very easy, as I said. Now all you have to do, you have to find the difference between the credit and the debit on the profit and loss account. If the side is higher, that means it will give you the profit. On the profit and loss account, if the credit side is higher, that means it will give us the profit, because credit side means the income and the debit side means the expense. So income minus expense will give us the profit. So can you find the difference? 28,557 minus 26,3482, that will give us the profit. That is 22,105. Very well done. This is my profit. And if this is my profit, it will increase my capital. And for that reason, it will be credit on the financial statement as well. Remember, if it is credit on the profit and loss account, like if the credit side is higher, if it is a profit, then it will be added on the capital. And for that reason, it is a credit on the statement of financial position. But if it is a debit on the profit and loss account, that means it's a loss. If the debit side is higher, if it is a loss, then it will go to the debit side on the statement of financial position. So very, very careful with that. If the profit and loss account give you the profit, then you will add it on the credit side on the financial statement. If the profit and loss account give you the loss, you treat this one as an expense and it will go to the debit. It will reduce the capital on the financial statement. And is it profit or loss? It is very simple to identify. If the credit side is higher on the profit and loss account, it's a profit. If the debit side is higher on the profit and loss account, it's a loss. For now, we have to select from here, is it a profit or loss? So it's a profit or loss for the year. And that's it. Now you can see everything is matched. So on the financial statement, the debit side and the credit side has to be equal. Remember that. These two will be always match. If it doesn't match, you have to still look for the reason why it's not matching. If it is not matched, that means you made some mistake. And remember that you have to look for that mistake. So if you see on the financial statement, debit side and the credit side is not matching, you have to look for the reason why it is not matching. All right, I think this is our end of the question for the practice assessment 2 for this advanced bookkeeping paper.